Welcome, ladies and gentlemen, to the casino that is the stock market. My name is Shades. If it's your first time here, be sure to subscribe and give the video a like. It really helps the channel grow. Now let's jump into the video. AITX rat sales announcement shows further solar farm market penetration. I don't think this is going to move the share price. Let's look at the share price real quick. I don't think. Where's AITX sitting at? Maybe it did move. It did fall quite a bit yesterday. So maybe it did. Let's see. Riot. No, that's not it. AITX. Yeah, no, yesterday we had like the biggest dump. So many people were scared, like, oh no, what's going on? Why is this happening? We're retracing 100% of the move. That's what's happening. We should be coming down to 002s. And you guys, if you've been following the channel, you know I'm waiting to add that 5K at 002s. If you lump sum your biggest position at the absolute bottom, it's not, even if this goes from 002 to 004, I can sell and still make money despite having positions higher at 007 because I lump sum the biggest position at the bottom. So there you go. Now you have a clue as to why I average down very little amounts and then I add the big position at the bottom. That kind of saves me from having to hope and hold and hope. Whereas if you buy the absolute bottom, I mean, from 002 to 004, that's a 5K, that's a 5K gain, and I can sell and make quite a bit of money despite having those red positions up here. So let's see. Multiple Rosa and real order increases momentum in this market. They received 6 device orders, 2 stationary Rosas, and 4 portable Rio 360 solar-powered security towers. The client for these initial 6 devices is a major operator in the solar farm industry. A lot of copy and paste here with the PR. This is their second major client in the solar farm industry. This sounds like a copy and paste. Is it just me? The solar farm industry is accelerating investment in RAD's technology is a testament to the value we bring in enhancing security and operational reliability, not profitability. I don't know. Some of this is copy and paste, which is why I'm not really reading through most of this. Solar farms face unique security challenges, including theft and vandalism of high-value equipment like solar panels and copper wiring. Well, that is a problem, the copper wiring. Unauthorized entry due to their large and remote locations, and the need for robust surveillance and monitoring systems to detect and respond to threats promptly. That's actually true. Those things are huge. You would need a lot more robots than just the initial 6. Probably those initial 6 are just to test out the technology. And if the company likes it, I imagine they would order more. And if they order like 50 plus, I mean, that's a lot of money in the bank. Because we did the math last time. Yeah, it would be quite a bit. Almost 100K, I believe. 50 units. Well, for the Rio at least. We don't know about the other units, how much those cost per month. Because they're leased out, not sold. Human guarding of such expansive areas would be expensive, yeah. That's true. Yeah, we don't know how much they charge for a Rosa. We know the math for the Rio. And I think that's it. Yeah, the rest is just the usual copy and paste for people who don't know anything about AITX. Yeah, no, the game plan hasn't changed. I'm still going to wait for 002s, and I'll be adding down there at the 5K. And from there, if you've been following me to a T, then you're lump summing your biggest position down there. and all it's going to take is that move from W2 to 4. You can sell, and despite all those red positions up here, you'll be green. That's kind of how it's been for me, and it works. It's a strategy that works. I think a lot of people make the mistake of averaging down on stocks that are in a permanent bear market. People always talk about averaging down is bad, averaging down is bad, don't average down. But the thing is, averaging down on something like Mullen, look at that. That, I don't know about you guys, but that looks like a permanent bear market to me. This thing has this thing. When was the last time this thing? Look at this. It just keeps trending to the downside since its existence, by the looks of it. This is the monthly chart, by the way. Averaging down on something like this probably not a good idea because it's in a permanent bear market, especially since the start of 2021. It's just been going down. So if you keep averaging down on something like this, of course people are going to tell you don't average down because you're going to just hold a bag and lose money. But that's because those people are trading stocks like Mullen. You look at something like Nvidia, for example. You average down on this one, and over the long term, again, this is the monthly chart. Over the long term, it just keeps going higher, keeps creating those higher highs and higher lows. So if you average down on this one, not only does it come back up for you, but then some. And that's the difference between averaging down on some garbage stock like Mullen and a winner like Nvidia. So don't ever let anyone fool you and tell you, oh, averaging down is a bad thing. No, it's not a bad thing. It depends entirely on the stock that you're trading. Now, AITX is a penny stock, but it does communicate and it does have product. And we know it can run. It's done so even despite this huge trend to the downside. We've been going sideways now for all intents and purposes, but we've been going down since that huge run in 2021, and we finally bottomed out at 002s in 2024. So it took almost 4 years? No, 3 years. 3 years for us to bottom out. So you know what I'm waiting for. And stocks that are trending to neither direction, all you have to do is buy the bottom of the range and hold, and we'll get a run. Because that's kind of, if it was running during a bear market, because it had its pops, as you can see here, during sideways trading action, it's just a matter of buying the bottom, or at least averaging down from the middle of the range. Because a lot of people make the mistake of averaging down from the very top. You know, there's people that bought up here and they're just averaging down from 1 penny. I did not buy up there. I started averaging down from 007, despite what some people might have you believe. I did not buy at 004. I did chase there, but I had a stop loss and I got stopped out. With commission, I think I got stopped out in the red. With commission, but it wasn't a huge loss because we didn't get a huge, dump from 001. I mean, from 1 penny to 005. It slowly comes down, as you guys know by the pattern. So I know this stock like the back of my hand, which is why I'm able to make these confident trades. And like I said, a stock in the trading range, as long as you're buying, as long as you're not cheap, yeah, as long as you're not buying the very top and averaging down from there, you'll be fine. Especially, there's some people who just lump sum, by the way. Like they lump summed like 10K up here, and now they're kind of stuck there and they have to bring their average down, which it's not bad compared to people who have been averaging down from 10 cents, 5 cents, 4 cents. I think it ran at 4 cents if I recall. But, anyways, that's despite the point. I'm just telling you what goes through my head when I'm looking at these stocks. So don't ever be afraid to average down. It's going to depend entirely on the stock. Do not average down, of course, on stocks like Mullen that just continue to go down. That is a losing strategy. But on good companies with real product and a CEO that communicates, there's a lot of money to be made. So just throwing some positivity your way today, because some people I think just they let the emotions get the best of them, whereas I trade like an algorithm. Is the share price at bottom? If share price at bottom, buy. Else, don't buy. It's that simple. But again, depends entirely on the whether we're in a trading range, uptrend, and if I'm trading a stock in a downtrend, then I'm probably just looking to take advantage of some volatility to the upside and then getting out. Like you would definitely would want to set a stop loss on something like Mullen if you're looking to trade some pop to the upside because you know it's going to come down because of that permanent bear market that I've been talking about. So for all intents and purposes, AITX right now it's in a let's just say a permanent, it's not permanent. Obviously, things will change, of course, at some point. But let's just say, for all intents and purposes, it's in a permanent sideways action over the long term. In the short term, we're coming down, but if you look at the monthly, we're just trading sideways here between, where is it? Between 23 and 85, at least on the monthly. And as long as we continue this sideways action, you guys know me, I love trading ranges. I'm going to continue to buy and lump sum the biggest positions at the bottom. And that is it for the video. Hopefully my voice sounds better because I am using an actual mic. Maybe I might sound too loud. So loud, in fact, that you hear static, maybe. I don't know. But let me know what you think in the comments below. And I will see you in the next one. Let me know what you think of that intro as well.